You're with us here on a fresh new edition of Trading Hour. The follow-through is there. The market is picking up pace and, it's looking good and green. With me is my colleague Surabhi. Surabhi, the follow-through from Monday to Tuesday in terms of the sell-off did not happen. But Tuesday, that is yesterday, we got that sort of burst higher.
Yeah.
And we got to follow through to that. That's basically been the underlying strength in the market.
Oh, yeah. I guess this whole concept of buy on dips, that's the only concept that seems to be working over the past many weeks and many months, right, Prashant? So I was looking at the screen today. So let's just quickly pull up the indices and then I'll hand it back to you for some more analysis. It's actually the banks which are leading it higher after the kind of drubbing that we've seen on the Bank Nifty and the underperformance there. It's some catch-up that's definitely playing out. And that's the story of the day. That's the Nifty for you. Now look at the Bank Nifty and you'll see what I'm talking about, because there the gain is over 350 points, almost 370 points now. So that's a definite green area. And then you've got support coming in from a lot of metal stocks. Metal prices have been pushing higher as well. So Hindalco, Tata Steel, JSW Steel, there's a lot of talk of price hikes in steel. That continues to support sentiment as well. So little to complain about, Prashant. Even the market breadth, look at the mid-cap participation. You really can't nitpick with that either today.
You cannot. Mid-caps and sort of large caps have been doing quite well. And that continues to be the case. So, I just want to take a quick sort of minute and a half to just run through the key levels across various indices and how they're coming into play. So the big thing overnight was not equities, it was basically precious metals. I'll come to that in a bit, but just a quick word on what's happening with US futures and Asian trade right now. The graphics will come up on your screen. The S&P 500 futures basically touched 3,300 in Asia. It's basically looking like, right now as we speak, it's at about 3,306. I think that is the close from yesterday, but the futures are above 3,300. And it looks like, the structure looks like it basically is heading to the previous all-time highs. The NASDAQ is also now trading above the 11,000 level. Again, those are key important psychological sort of marks. Remember, many have been talking about the fact that US markets also probably are going into a bit of a distribution phase, and big pushes higher are harder to come by, but this is positive nevertheless. Gold, that was a spotlight from overnight. It's traded above the 2000 level. It's gone on to about 2021 as we speak. Citi points out, their global research team points out, that this is largely a ETF-led move. Some $9 billion has gone into gold ETFs over the last 5 days, they highlight. And, the average cost of entry for that money is about $19, $20, $19, $25. So they're in the money as we speak. The other is the dollar index. As we came into the week, there was a bit of confusion whether, the move lower on the dollar index is done and the dollar index will start to move higher once again. We got to about 94 kind of levels, but that's where we basically stopped. And it's weak once again. I think as we speak, we're at about the 93 point something kind of levels. We've been highlighting the horizontal support for the dollar index, which lies at about 82.25. That's the big, you want to call it a target, you want to call it a support, but that's basically the next big level to watch out for. Will it happen in this leg or not? That remains debatable. But I just thought we'll set this up in terms of the overall global picture and how sort of positive it looks from a risk perspective, risk-taking perspective. But we have Jay Bala of cashthechaos.com, who's now joining us to run us through what he makes of charts, what he makes of the market here. Jay, thanks very much. Good morning. Great to have you with us here. Let's just sort of start with the market, the Nifty and the Bank Nifty. What do you make? What do you make of it? It looked like the market would perhaps turn back a little bit. There would be a short-term pullback. But as yesterday and today's session shows, the drawdowns or the pullbacks are not followed up with another leg down. It's usually the reverse. The market recoups gains very fast and then adds some more. Where do you stand?
Yeah, good morning, Prashant. Thanks for having me. So basically, the markets are in a bit of a struggle on either direction. It's very obvious the markets are stretched on the higher side. But if I look at the SGX Nifty, the move from the highs of July, about 10,300 odds, it's looking like this is a start of a correction. But the spot market is refusing to confirm that. So we are in a little bit of a no man's land. The supports for the Nifty spot is at about 10,950 and 10,880. So 10,880 is a crucial level. In fact, 2 weeks ago, I was on another channel. I said 10,880. Do not short the market unless the market makes 10,000 breaks 10,880, and the market made a low of 10,882. And the resistance right now is at about 11,250. The key problem for the market is actually reliance in a positive way. With its up move, but it could be near the end of its up move. Today it missed the all-time high by about a couple of rupees. I would say if it does get taken out, the next resistance comes in about 2,300 for Reliance. So as long as Reliance doesn't finish its move higher, this market is going to find it difficult to correct lower. For the banking index, the supports come in about 21K. And the resistance at about 23,100. The problem for the banking index, it's looking quite weak, and I find it very difficult to view it bullishly. But nevertheless, I've brought in a bullish count for the banking index. For that, the key is going to be the private sector banks, and particularly HDFC Bank. As long as HDFC Bank stays above 988, I can forcibly take this bullish view on the banking index. But on the first look, it doesn't look all that great, and the private sector banks are going to be the key to it. And so basically, we are locked in a tight range at the moment. And last time I said the market does take out 11,250 levels. It's going to try to push closer to 11,600. So it's attempting that, but it's lacking the mojo for it. It's lacking the firepower for it. Because lots of firepower has been used for the markets to come up to these levels. So be very cautious as to what the markets are doing at current levels. Have these levels that I mentioned as the bull-bear divide line, particularly 10,880. Once 10,880 breaks, we can look at the markets dropping somewhere closer to 10,500, 10,200 as a corrective move.
Okay, Jay, good morning. Now let me get back to the even more interesting points that Prashant was raising on the correlation that the dollar is having with a lot of asset classes, including, of course, things like gold. These are historic times, 2000 plus. What do you, first of all, make of the dollar's move? What are you reading on the charts? And then the kind of correlation trades that perhaps we will see play out over the next couple of weeks.
Yeah, see, I spoke about the dollar index in June, Surbhi, and I just before the Fed meeting in June, I said the dollar is going to catch a bit and it's going to bounce somewhere close to 98, but the dollar bounced only till about 97. The longer term picture, I said I will define it on a later date, and that later date is probably now. The key support for the dollar index comes in about 91.5 and 92. So I think it's got one more push lower. I think that will be an exhaustive low for this leg of the move, and it will start a rebound for the dollar index from those levels. And that bounce, how it translates, is going to be pretty important. And conversely, the USD euro cross, which constitutes about 60% of the dollar index basket. That's also looking like it's coming to a resistance at about 1.19, 1.2. So this is the most vital asset class at this moment, as you've rightly pointed out. And the emerging markets strength has been due to the dollar index weakness. If you look at the EEM, the emerging markets ETF, along with the dollar index, you can very nearly see a lockstep move. So watch out for this. I think for this leg of the move, at least, we are coming to a sell-off finish for the dollar index, and it's very close to it. So that's one more reason why you need to be cautious on the longs on the Nifty. Once this reversal does take through for the dollar index for the short term, we might see some correction take place for the Nifty index. And interestingly, emerging markets currencies like the Russian ruble, South African rand, and the Mexican peso have shown a considerable amount of weakness from June to July. So usually currency problems and contagions start with this three currencies weakening. So watch out for it. There are warning signs. These can be overcome, but you must acknowledge there are warning signs here.
Oh yes, fair enough. I mean, so maybe in the very near term there is a reversal in order in the dollar index, and that is what is making Jay a little more cautious for now. And he's highlighting some of the global emerging market currencies as well. Precious metals now, where are they headed? Both in dollar terms and rupee terms?
Yeah, I was bullish on the gold on non-dollar basis on every currency. I didn't expect the gold to cross record highs in dollar-denominated terms, but it has. But from a structural point of view, I think gold's short-term move looks unfinished. But silver is looking like it may have completed the move that it started from about 11 and change. So watch out for it. This kind of reversals usually happen around the market's turn. Silver tends to lead the market. Right now, gold has made, even this morning, it made a new high. Silver didn't. And there is a slight momentum negative divergence for silver. Usually, the ending moves come in this fashion. So tighten your stops if you're long in gold. Though no significant levels are under threat at the moment. So, but or you can, if you can understand bull call spreads, that's a way to mitigate risk in the precious metals market. So basically, we are watching out for it. The important resistance for gold is about 2060 to 2080. I think there is a good chance that it will finish off this move there without silver going to fresh record highs. Sorry, fresh 52-week highs. I'm sorry.
Okay, all right. So with that caution in mind and tight stops in place, what are the equity trades, Jay?
Yeah, usually this is another sign, Surbhi. Usually it's easy to find long trades in the market. I found it a little more difficult to scan through the market and look for long trades. And with that in mind, I have two ideas. One is a long on HDFC Limited. You go long with a stop below 1725 and a price objective of 1925. This identification was a little more easier. The second one was MRF. MRF is a long with 60K as a stop and a potential for about 68,000. You see the auto stocks are doing well. Probably this is likely to spill into auto ancillaries. And Balakrishna Industries is already doing well, but MRF is looking like it's just about to take off. So I'll add another note of caution here. You might want to reduce your position sizing even lower than what the lot size is there on the F&O space for these stocks, because we have come up a long way from from the June lows to the July highs. So either you go using long using call options or reduce your size in the cash market lower than the futures size in the futures market.
Okay, Jay, you talk. Okay, MRF and HDFC are the two names that Jay basically is saying, and you're saying, well, use call options, reduce the size of positions in terms of lot sizes, go down and not more. So throwing in a word of caution here. Thanks very much, Jay. It's always a pleasure speaking with you. Appreciate you joining in with a quick check of things, not just here, indices, but globally as well. We will take a very quick break here, the first here on Trading Hour. We are back in 2. We come back and we spoke about gold and silver prices with Jay. My colleague Manisha Gupta is going to be here with more on the move in precious metals. Back in 2.